What is going on, guys? Welcome to another market update. So let's get straight to the charts. As mentioned in the previous videos on Quantonomy and this channel, I expected us to break to new all-time highs from this bullish symmetrical triangle, only to come back down in a controlled fashion to retest crucial support in the high 90 to low 100k area, which we have done so far. After that, we had a nice breakout from the pattern, followed by a retest almost touching the top of the channel again. All in all, there's still a very good possibility of us building a macro bull flag here to finally break to these significantly higher levels most of us have been waiting for a long time. I've been sensing that the overall sentiment has been getting slightly pessimistic lately. After all, you could say that we were at the same level all the way back in December last year, or half a year ago. What people fail to really take into account, however, is that we were at the same level during a completely different phase of the price action. Back here, we were riding the Trump optimism mania train and having price discovery into completely uncharted territory. Bitcoin was incredibly overbought and was in desperate need of a correction. Coming back to the present, however, we have already had all of this corrective price action, so people should actually be way more bullish than back here. But that is not how most crypto bros think. Before continuing with my thoughts, let's look at some other charts and indicators. Let's start with the DXY. It finally happened, guys. We had a decisive breakdown from key support. At first, we had a little bit of a dead cat bounce over here, and we got rejected off of this entire support area that we built for really several years here. And now, finally, after this smaller dead cat bounce, we're actually continuing to dump to completely unvisited areas, at least for the past couple of years or so. Really, where we should be looking for the bottom here is at these types of levels in the 90 area or so. So we're very far away from those areas. And as you can see, when looking at Bitcoin on a close basis on the weekly chart, we're still technically at new highs. We haven't even broken down below the previous highs here. Now let's look at the CME. As many of you know, we technically have a gap over here at 92,000. So if we were to retest this area here, then this could be filled. However, bear in mind that it's not 100% necessary for us to, first of all, fill this gap at all, or even if we do fill this gap, it could be in the next bear market. So you never know when it could actually fill, even if it does fill. So far, we're quite far away from that gap. When it comes to this gap, however, I was very confident that we would eventually fill it. And this is exactly what we did. Now let's have a very quick look at the unemployment rate. So everything is still looking quite stable here. We're still ranging and we have quite a bit of headway above us before reaching the 5% level, which is traditionally associated with stock market crashes and recessions. Now let's look at the effective federal funds rate. And as of right now, the federal funds rate has been flat. And this is expected to be the case in the future as well, because we're going to have another meeting next week where the Fed will decide what the next effective federal funds rate will be. And the market is betting on it remaining flat. And the Fed has kept interest rates higher than usual all year to counteract inflation and hasn't lowered them out of concern that President Donald Trump's tariffs could push up prices for consumers. And Trump has also repeatedly criticized the Fed and more specifically Jeremy Powell for not cutting rates and could renew that pressure if the Fed keeps rates flat as expected. Now let's look at the liquidity levels. This is a subject that Marcus really loves. Anyway, it seems that as of right now we have most of the liquidity above us on the short side. So this would be pretty interesting if it got liquidated. But we also have some liquidity below us here, and we lately cut into this liquidity zone over here, which was also quite significant. Right now, in theory, the juicier reward would be if we broke to the upside. Now let's look at some news. First up, we have Trump Media and Technology Group, the company that owns US President Donald Trump's Truth Social platform and is partially owned by the president, receiving approval from the US Securities and Exchange Commission for its registration statement tied to its $2.3 billion Bitcoin treasury deal. According to a June 13th SEC filing, the agency declared effective TMTG's S3 registration statement, filed on June 6th, for the Bitcoin treasury deal. By simultaneously enhancing and growing our social media platform, TV streaming platform, and our fintech brand while establishing a Bitcoin treasury, we aim to continue rapidly transforming Trump Media into an indispensable company for the expanding customer base of the Patriot economy. So, now that we know that in addition to the strategic Bitcoin reserve, Trump himself is gobbling up Bitcoin through his own company, this gives us even more confirmation that Trump is betting heavily on Bitcoin, not just his scammy meme coin designed to enrich himself, either through the contributions of ignorant investors or even bribes from world leaders who pledge to buy his coin. Therefore, we will probably continue to see Bitcoin-friendly legislation, at least for the next 3.5 years. We also have news of BlackRock's ETF inflows approaching $1 billion this week amid institutional interest. So on June 12, 2025, BlackRock announced it had increased its Bitcoin holdings through its iShares Bitcoin Trust, responding to strong institutional demand. The firm's ETF has seen record inflows, surpassing $70 billion in assets under management, solidifying its position as a leading crypto investment vehicle. This isn't just a fund growing, it's a signal that big players like pension funds and banks are diving into Bitcoin like never before. It's a huge win for mainstream adoption, but let's keep it real. Centralizing so much Bitcoin in one ETF could raise concerns about control and market influence. This meme is pretty relevant here, so a lot of these big players could easily practice self-custody without trusting their Bitcoin with BlackRock, MicroStrategy, or any other company holding Bitcoin. That is one of the benefits of Bitcoin, after all. Now, let's look at the M2 money shift for Bitcoin. And what we can actually see here is that Bitcoin has been dumping here, where the money supply was dumping 85 days ago. Because as we know, Bitcoin follows the money supply with an 85-day lag or so. So in theory, if we were to follow this perfectly, we could reach 150,000 by September or so, but take this with a huge grain of salt. It's very unlikely that we will be following this perfectly because, as you can see, this is just an overlay here, and these parts are more out of sync. As you can see, this is completely different compared to Bitcoin. These are different scales after all, but these couple of moves here, these last two moves, have been following Bitcoin quite well. And also what you can see here is that when the money supply was ranging here for several years, it was finding similar resistance at the previous high, where Bitcoin was finding resistance as well. We had this all-time high over here, and then it took a very long time before we broke above it and then retested it. And this is exactly what the money supply did as well. Now let's look at the S&P compared to Bitcoin. And what can we actually see here? Well, the S&P has actually been making higher highs while Bitcoin has been making lower highs. So overall, they're actually synchronizing with each other, because before, Bitcoin was front-running the S&P. As of right now, they're at very similar levels. So how can we interpret this? I think it just means that we're at a pretty indecisive moment of the market. Nobody really knows where it's going to go next. So there is no real first mover over here to tell us the direction. Now let's look at the crypto fear and greed index. There's nothing really interesting going on here either. We're at 63, which is technically slightly greedy, but nothing to write home about. It's completely normal in what's supposed to be the mania phase of the bull market. So if we wanted to go to the upsides, we would have plenty of room to do so. But technically, of course, we could also crash. Google Trends is looking very boring as well. And what can you do? Sometimes the markets are ranging and boring. The good thing is that nobody is really interested in Bitcoin, which has been the case for a while now. And once we actually start seeing these massive spikes over here, then we'll know that we're actually in the mania phase of the bull market. Right now, nobody really cares. Now, back to Bitcoin. So, what can we observe over here? Well, as of right now, we've had two bullish retests of the 50-day moving average. So, let's hope we can stay above it. We technically printed a bullish green hammer over here, but then we got rejected off of the 20-day moving average again. And right now, we're dumping. As long as we don't take out this low, things are still pretty good. But in theory, we could come and retest some of these other moving averages as well, which would line up with previous support. So the weekly chart is looking similarly indecisive. At first, we printed this quite beautiful bullish doji over here, but then we got this pretty bad looking candle after that. So Bitcoin doesn't really know what it wants to do right now. Interestingly, the 20-week moving average is also at this level over here, which was previous support and resistance as well if you look at the daily time frame. So, where do I think we're headed next? As of right now, we're consolidating in yet another range. We had our high, a low, a lower high, and now the question is whether we will put in a lower low. If Bitcoin manages to put in a higher low, we could possibly form another symmetrical triangle type of pattern. If we go lower instead, it could still form a larger macro bull flag. As of right now, this entire move looks very corrective instead of some sort of beginning of an impulsive move to much lower levels. Even if we were to break down over here, my absolute worst case scenario would be a retest of this low 90k area, which has acted as important support and resistance for about 7 months. As of right now, however, there is no evidence yet to suggest that we're going to do anything like this, so we'll have to wait and see. Either way, it is only a matter of time when we're going to explode to much higher levels, and I think this will happen much sooner than most people are thinking. You can essentially summarize the price action of this bull market by drawing a straight line through it or below it. And as you can see, our current consolidation is not that much above it anymore. This unusual staircase bull market is becoming more and more predictable over time, and if anything, the last leg of the bull market will just be the most impulsive of the many steps higher we have seen this cycle. I've been utilizing this opportunity to accumulate as much relatively reasonably priced Bitcoin as possible for that nice 2x potential before the train leaves the station completely. Some people have been losing hope of reaching our moon target of this cycle, but personally I remain very optimistic. This is Saverio speaking, and as always, thanks for watching.